Hello, friends. Welcome to Akulmach Live. And today is Sunday, and therefore we want to discuss about business. And today we have a very interesting subject. It is how the interest rate function. And you must have heard that the central bank is bringing up the repo rate or bringing down the interest rate. All of this, about the interest rate, how it impacts the economy, and more importantly, how does it impact your business. This is the subject that we will discuss with our guest today. His name is Vasant Tomar, very senior person in the industry, and he can actually guide us and inform us about how the interest rate functions. All right. So if you want to learn about these things, stick around. And now let's welcome our guest. Hello, Basant. How are you doing today? Welcome to Akulmak Live.
Thank you, CK. Doing very well. Thanks for bringing us back.
So, Basant, as the topic is the interest rate. Uh, People learn about these things from the news, but we don't even think about it. So, do you think this is something that every business person should look at very carefully? Do you think this is important?
See, per se, for a normal, a job going kind of person, or even for a small businessman who is not really looking at funds, it's like then it's not to that level that it impacts them. It's slow impact, which you don't even come to know. But after a certain period, you realize that the power of money has reduced, and see, it's only when you want to grow the economy these things will come into picture. If I want to, let's say, create economy and or industry or a factory which cost me a few crores or a few million USDs, there these things are going to matter. Otherwise, overall picture more or less stays the same for people because they've been living in this for a very long time. So they really don't understand. It's happening, it's going, and the life is such that they are really not concerned too much about it.
Well, Vasant, I think the way it happens is that inflation is added every year. That is the growth, because inflation, if there are no inflation, there will be no growth. And if there are no interest rate, there will be no inflation also. So I think this brings to our first question, which has been sent to us by our audience. And that is, can you explain how the central bank determine what interest rate, what interest rate policies, and what factors they consider which are most critical for our nation? So this is the question. Over to you, Basant.
Sure. Now, I really don't know if people know this, that how does, interest rates come into the play? Who decides that what interest rate will come in and how and when? Basically, we see card having this interest rate or a housing loan interest rate coming, going up, or, for loans, for business, for my, let's say, deposits, etc., etc. Interest rates per se are a play between a central bank and the subsidiary other banks in the country. Central could be RBI, and for other tons of banks. Now, where the interest rate comes into play is every bank has to put 10% or sort of defined figure of the total money that they have in their bank as savings with the RBI or the central bank every night. Please understand that. So suppose I have asset. I'm a SBI. I got asset of, let's say, 100,000 crore or a lakh crore or a crore whatever. Out of that, 10% every night goes to central bank, right? Now you cannot really identify any bank. It's like just a way to understand how much do I need to put in. If I put in more, then it's an opportunity loss because there are so many banks. They all are looking at somehow to park the money just for the night. Now this is the game of night. where people will not know this. 90% people will not know this, but itna samajh mein aata hai, they understand that our money is safe with the banks because RBI has the kind of some deposit equivalent to something in their banks. Now, for example, as I said, RBI has to put in 10%, it puts in 15%, for example. It doesn't know, so it puts in more. Now, it is losing that 5% because central bank doesn't give interest to these banks. So this bank, this SBI now has paid more to RBI, where it gets no interest, where it could have paid this to another bank who needs money basically to pay even the 10% because either they don't want to, give the funds because these funds are involved finally in lending out to businesses and industries. If I've lent out more, I have less of money, right, in my bank book. You need to understand that. So this is where the interest rates come and play within a certain limit defined by RBI. When these interest rates change, this will change everything down below. So SBI will change certain interest rates of loans, this and that. Then comes the economic factors which are into play. So how these taxations come into play is this. Then comes inflation, unemployment, and the country exchange rates. Then these things come into play. Inflation, if it is high, then the banks need to reduce the interest. If it is low, you got to increase the interest rates so that the economy comes into on a level playing field.
Vasant, I've heard that some banks actually do investment in the countries which are like during daytime, during our night. So, is it compulsory to put the money in RBI, park it overnight, or they can take it out and invest in Western countries?
No, you can't do that. That 10% or whatever is the defined figure is mandatory at any cost. By night, it has to be in the RBI. Nothing doing, no discussion on that. It's a law. Simple.
Do you think they should change the law in order to make more money?
No, 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 no. They will not. They should not, because this is the guarantee, and this is how RBI also controls the kind of money in the system and how it needs to flow. This is just to stop so that they unnecessarily don't invest here and there. You understand that? Only thing that they do at night is invest in overseas kind of things or certain places. I mean, which they could, but then the bank has to, the RBI has to keep a check on this.
All right. So I think let's move forward, and I think we have understood how interest rate work from a 90,000 feet level, at a high level, basically. So let's look at the next question, and that is, how does the change in interest rate directly impact everyday consumer? Because Basant sometime back said that most of us do not really care about the interest rate on daily basis, but it actually affects all of us, particularly in terms of loans and savings. So, over to you, Basant. How does it impact all of us, whether poor, rich, or super?
Okay. Now, see, where are the interest rates coming into play? I did say before that it's only when you need money or when you have extra money, you want to park it and get something out of it. Only two things which are there. Now, you need loans. If interest rates are high, it's hard to take a loan and justify, because that loan finally hits you too hard eventually over a period of time. You are more prone, for example, if it doesn't work out, then you got too much to pay and you can't handle it. Or if your deposits, if they're too low and it doesn't even cover the inflationary, for example, a year inflation is like 8-9%, and you're putting in deposit and they're not making even 2-3-4%, then you're losing the opportunity there, and you're actually losing money, the value of money, and whatever you have in your hand, its capacity to buy things goes down. So it impacts every individual from that level, not just like if I am day to day working, it's not going to impact me unless I see over a period of year or a month that how much have I paid out and how much my same money, which people actually don't even look at that last year. But then they do say that if the salary has not increased, it is pinching my pocket. I'm not able to do what I was able to do, let's say a year back or a 2 year back, if my salary doesn't grow, or if I do not grow. So this is where this impacts people and their decision making and their lifestyles also.
So basically, what you're saying is that when it comes to savings and deposits, however, when we talk about business, most of the businesses are taking loans, and I think there is certain percentage of their deposit is paid out as loan, and that is how they do business. And everybody is doing that, whether large, small, even a small mom and pop shop is doing that now. Do you think because everybody is indulging in taking loans at certain interest rate, changing of interest rate will impact a common man whether you have taken loan or not? Does it happen or doesn't happen?
Indirectly, it's going to impact because it will affect the economy. It will affect the person serving you. It will impact, other things around you. So either cost will increase, obviously, if things go wrong. So when you say everybody is taking loan, it is not right that everybody does that, but the banks also don't give it to everyone. So that's why there are loan sharks. If you see the tons of things that you hear that people buy money at very high, interest rates. Now people are doing it. This is where the industry is really not rising to that level where it is supposed to. So people do not have funds in their hands. Now these are some are developed countries where a debt is a leverage. So what you do is you leverage it to do more. So how it works out is, for example, I'm doing $1 billion or $1 million business. Forget billion, $1 million business. I've got certain assets, right, which are increasing. Now, for example, I have a property which is 10 million, $20 million. I will take out a loan on that, or a mortgage, and I will use that in my business to develop my business, and I'm able to pay EMI. See, this doesn't affect those 5, 10, 15% of people who are good and they want to use debt as an instrument, as a leverage. Not that I do not have money and I can't even repay, the interests on that. So we need to learn to differentiate when somebody says that, when to take loan, when not to take loan. Why large business houses have large loans and they look for lower interest rate outside is because they can then leverage that very well, rather than stay in a tight position where you pay more on interest and overall money. So this is impacting.
Vasant, I have a question from my side. You see, if you look at the developed economy like US, which is quite developed and it's democratic also in nature, and they have a rule of law, etc. The interest rate when it is coming to deposit or the loans, the difference between the interest rate is not very high. You can take a cheaper loan, and when you deposit your money, you don't get tons of money. The difference is not very high. Unlike India, which is when you deposit, the interest rate is quite low, but when you actually take loan, the interest rates are high. Do you think this makes or this is a sort of a image of being developed or developing nation? What is the reason why in India the interest rate variance is so high?
It's about economy and the purchasing power of the money. The exchange rate that a country carries, export, import, the business that is done, and dependency that the world has. Now we cannot talk about America because majority of people park their money, use dollar as a premium kind of currency. You know it, and I understand that. So when we say that a dollar has a huge purchasing capacity, then per se locally in US, obviously things are at a level where you really get a very low interest rate when you want to buy something. It's much too cheaper, so people are able to get loans and work around in that sense. For example, a mortgage or a car loan, etc., they are at a very lower, cheaper rate. So if you want to do something, people go there. Why people want to go to US and do work or get business done there is the only reason is that. Second, see, you're getting making enough money, because that country is developed. So it's not about loan. They don't see per se for themselves. It's very large hedge funds or those guys who will park the funds or take out the money or take loans from there and invest those low interest money to places where they know they'll get higher returns or high interest. India is a way too different market. We are not in that position. In fact, we are way too low. Our purchasing power per se, where we stand in the market. The global markets will not even accept the INR as a currency. We move out a lot and we see INR has per se no value. Whatever people may say that, this has happened, nothing has happened. no country is interested except for the places where there are too many Indians. There could be certain medium where you could have INR being used in that country for those kind of people. Otherwise, no. Dollar is placed everywhere, left, right, center. You will take dollar and go, not INR.
So before we move on to our next question, I would like to add that Basant mentioned that US dollar is a premium currency, which is true, and I think it's a game also being played by the US, where in case they are hit by inflation or slow down in their economy, they just offload all of that in all of us, because all of us actually do international trade on dollar, and since the dollar value is affected in their home country, we get indirectly affected by that. So the entire world goes through the recession in case US economy goes through the recession. I think that is where the trick is being played by the United States, and I think the hegemony of dollar is very evident. Okay, so let's move on to the next question, and that is, what are the potential long-term economic effects of sustained low or high interest rates? Um, Sustained low or high interest rate, Vasant, what is your opinion?
Sure. Okay. Now we all know the global financial crisis of 2007. Everybody understands that where the market simply crashed because there was no policy which was actually controlling anything. So everybody decided that now after 2007, people got more tighter to fiscal policy, monetary policy, interest rate, and this and that. This is where once the economy is down, the only way to prop up is reduce the interest rate so that people can get access to cheaper loans and try and build up, right? Take more loans, buy things, do this, do that, hoping that the businesses will rise and people will be able to pay the EMIs and blah, 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 blah. Canada is going through that for last probably 8, 10 years. The interest rates are so low. Now the people are getting worried. Now, because interest rates are low, there is certain strata of people, those who've taken loans. Now, please understand, as I said before, some people use loan, a debt as a leverage. Some will use it, or majority, to live and survive or buy certain things of a daily use or be able to buy things which they need now, need today to use, which they can't if there is no loan and if they can't get into any EMI picture. Now these people will get more trouble in a sense. They're more prone to economic fluctuations. Please understand that. And once that happens, and which does happen, by the way, it could happen in the industry. A recession could come in because of certain economic or social political factors, or people losing their jobs. So in that scene, more debt on my head, I can't bear that. I will not be able to pay it off, and I will go further down. Or let's say some medical emergency hits me. I'm already in debt because I'm at low level. This happens too much in this country and India also, that the lower or 40-50% of people, the farmers or the daily wage laborers, are seriously under debt, heavy debt, and the interest is far too high because the sharks are there. There are very few NBFCs or certain people who are actually giving loans because they have no credibility. I mean, they have no banks also. So what do you do? So this is where it impacts certain level of people, and you can't always have a lower kind of thing because you need economy to rise. If it doesn't rise, then there'll be a bust eventually because people will not have money, and there is up and down cycle, which happens in any environment, any business. You never know. You no one knew if Russia will attack Ukraine. No one knew that Israel is going to get attacked. No one knew that US will get into that stage where inflation is high, and all of a sudden the guy starts raising the repo rates, the bank rates of interest. All the money from outside starts getting pushed into US because they need more interest rates there. So people buy US. Now that's typical to the US story, where Fed reserves play a huge role. Now this is what I explained regarding sustained low rates is not good. It's only there to bump up the society, to give it a fillip, to say so that I'm giving a push to the society. So I need certain, kind of leverage. So we do that. But then here we got to be careful which kind of people and the policies of the government, where you are making the fiscal or these policies, that how you're propping up the economy. doing other things, not simply playing with the money or interest rate is not going to help. You can't print money. If you do that, the value of money goes down. So it's a very difficult game to play, to manage. Initial it helps, but over a long period of time, it is not good. So that's about low. Again, same happens with the high. If you keep it high, people will not be able to take loans, or you cannot prop up the economy. If you think higher interest rate will check your inflation only for a certain period of time, if you sustain it for a longer period of time, again, you get into that recession, and those kind of cycles continue, keep going on.
Well, Vasanji, many people have this confusion, especially people who are not from the economic backgrounds. Whenever there is a recession, the RBI governor or any central bank in any country will come up with an announcement saying that, oh, there is a recession in our country, so we are going to boost up the economy by reducing interest lending rate by 0.25%. This always happens. So how does this function? Can you explain to our viewers?
It's like, again, we're doing the same thing. Well, the same thing happens that, again, we really do not look at why recession happened. There are so many factors: social, geopolitical, employment, this, that, industry is not doing well, or the policy governments are not good. Once it hits a recession point where the values are going down and the economy, there's not enough production, it's again between let's say import export kind of thing, where you're not able to even export things, and you're importing mostly. So your purchasing power is reducing consistently. You can't buy things, and the job market is down. The industries are down. What, as I said, the same story, that you want to pump in money into the economy. So how do you do that? The only way to do is that give them a chance to buy at a lower rate, so the interest rates of loans are reduced. Why, as I did explain why, how it works, that if you have reduced, so if I buy say a lakh rupees, for example, it was 10%. If I reduce it 5%, tons of people will start buying, right? They will take loans and they will buy unlimited. This is how it happens, that you'll buy tons of loans and thinking that I'll be able to raise the my level of income. And if I'm not able to do that, same thing, the shocks happened in China, that too much debt was taken, and the same happened in US about the housing collapse which happened, where a lot of banks simply vanished because so much money was there down, and people were simply not able to pay because recession hit, and there was no money with the people to actually pay back. So people need, this is a game, is a ploy. Actually, I don't see too much logic around it, unless coupled with certain factors which help you raise. Not just the interest rate is not going to help you if you reduce it. It's just gives you a breathing time. You need to be preparing it, to do better things with that kind of money, where you can get more leverage out of it. You create more. If you don't, you are in a debt. You are in further debt, and you can't service it in a long time. Then.
All right, Vasant, I think it's very clear to our viewers that understanding economy is not so easy. It is quite difficult. So let's move on to the next question, and that is, can you describe the some recent example where interest rate adjustment significantly influence a country's economy? I think this is related to what I asked a moment back. Any adjustment to interest rate, does it help us or does it spoil our chance of recovery, etc.? So if you can just throw with an actual example, that will help our viewers.
I think the where people point to, these are typically to the Russia and Ukraine, uh, majorly. I don't see any other in that sense, because the kind of effect that it had, it crashed, because no one wanted to do business or allowed to do business with Russia. The Russia lost the currency value. I think it fell too low, and then the whole idea to prop up the economy was to somehow raise the interest rates to higher levels, and bringing things up. So for Russia, I think I just studied a bit. I think they increased rates to probably 18-20%. That was pretty high. Looking at or the northern average interest rates is like, which hovers around 2, 3, 4, 5, 6%. So they pushed it to 18%, where it becomes not easy to run a country also. and people are holding on to money there. There's not much business happening in Russian economy in that sense when everybody has stopped working with them. So they have to raise it internally. So that's typical scenario, which actually is not, I don't know, it's like political also. Same happened in Ukraine also. Interest rates were way too high, then they had to be reduced. Russia had to increase. UK had to reduce the interest rates so that people can somehow survive. But still, I really don't see the impact of that in that sense that it has been more towards a conflicted kind of thing where these things have come, not as a part of general economy which plays out.
So I think we are now talking about a little bit, we are only touching upon the geopolitics. So let's look at our neighborhood, where in a country like called Pakistan, the IMF actually pressurized their central bank to increase their interest rate. So does this happen? I mean, I'm not talking about Pakistan in particular, but an external agency can pressurize a country to increase or decrease interest rate. What is your
See, looking at the country's inability to even feed its people or raise money, then what is the choice? Look at the rate of petrol or other things. I mean, or any food item. The inflation is so high there that there is no choice except to increase the interest rates. So that unnecessary either money doesn't flow out too much and people somehow pay more in a sense if the loan is taken, and I really don't know how it is helping Pakistan. But then why the IMF is doing it? Because IMF is going to increase the loan, give the loan. Basically, the job of IMF is to handle the economy of countries and see that it doesn't have a ripple effect on other economies. If that is important. I don't know how important Pakistan is to a global economy. I really don't see it in that sense. But Pakistan is constantly asking for funds, and it will not be given unless they see some movement in Pakistan where they see they're serious about it. So having a high interest rate does show, IMF that there is a chance that probably the money can be, given and things will change.
Basant, why I asked about Pakistan? I think it's because we're talking about interest rate and an external agency forcing a sovereign country to influence economy. So, does this a real thing, or does it happen, or it's not real?
No, it is. It's like again the same story. Why it happens is when I'm asking for too much money, I have nothing, and the money that I've taken, I'm not able to pay. What will you do? For example, between you and me, I keep coming back to you, and you keep giving me loan, helping me from here and there, and eventually I'm not able to even repay. Finally, what will happen? I'll ask you. Let's increase the interest rates, right? So that it becomes harder for you, and you work harder for that. It doesn't happen normally. I don't think countries get into that kind of bad shape. And as I said, I really don't know why it is into that kind of situation. But I see the country selling off all the assets, whatever they can, and still unable to raise it because of the policies of the country. I know how business works there. You simply can't do business. I've tried for 9-10 years working in telecom and with the software industry, all the BPOs there. It's impossible to work with those countries. It's very hard to do business in Pakistan. Majority of wealth creators have moved out. Ukraine even UK has lost a lot of wealth creators because they have increased, a lot of rates. Taxes have been raised, and they are increasing taxes day by day. The new government of Kramer. A lot of things are happening in UK also. If you study that, the people are flooding. They're moving out so that they can save the money, and they're still able to do more business there. So Pakistan is a curious case. If you look at moving with a begging bowl, it's not going to work.
Well, I think we have discussed real examples of countries, and interest rates are not such trivial things. These are very, very important things. It can also affect the sovereignty. I think the discussion was about to bring about this aspect of interest rate. Simple thing, but it can affect a country. And that brings us to the last question of the day today. And that is, how does the interest rate policy interact with other economic tools such as fiscal policies, and achieving economic stability. So, Vasant, can you throw little bit, share some information with us how the interest rate gel with the policymakers?
Right. Again, now you see, I don't know. It's you can't really separate them out because the interest rates is per se more or less a part of that story which is happening. Now, fiscal policy is what? It's what government wants to do with the kind of money they have, the generating money and spending the money. That is what fiscal policy is all about. Now, what all comes into fiscal policy is they need to spend money for infrastructure. They need to ensure that employment is given and the economy grows and the prices stay stable and the wages stay. Interest rates will play its part because rising and again increasing or raising those interest rates will affect the fiscal policy of the government and the vice versa also. So if my policy, for example, is to increase the growth, I will try and reduce the interest rates. But then I have to be careful. As I said before, I have to see that the long-term impact of that. Same I can't be wasting money, on public largesse. This is what the Indian government, sorry to say, does. If you look at Singapore, brilliant policies where they don't waste public money on any project. The whatever industry or the let's say railway department wants to do something, raise the money from outside and spend it, please, and pay it back. Country is not going to do it. So this is where the interest rate and economic stability of a country gets impacted, where fiscal policies are not controlled. We have a budget deficit all the time, 5, 6, 7%. We keep talking about it, and then we borrow the money. Imagine where it is headed if it goes beyond a certain level. 6%, 5% is okay. They say it is fine. But then if you ask me, that's also too much, having a $50 billion of a fiscal deficit. Why you should have it, in a country like India? That is too much to ask for. Singapore has zero debt. In that sense, we have tons of debt on our head.
One attached question to this existing question that we are tackling, and is that when the RBI or the central bank comes out with a rate, so every financial institution, everyone in the country will have to follow that rate as a benchmark, or they can offer something higher or lower.
No. They can't do that. There is a law. If of course, see, I'm not talking about now the interest rates on a very specific kind of, let's say, a credit card per se, which is dependent on any bank or any institution how they want to do it. But then there is a larger picture here where everybody works and they know they got to keep it at a level so that they don't fight among each other. That's different. Now, when RBI defines, that your interest rate should be around this, a bank, if it goes high and above, it is going to impact, the bank's way of working, giving back money to the RBI, also then lending it out and ensuring that the NPAs are too low. The RBI tightens and keeps things under control. Still, we see a lot of banks having too much of NPAs, so they need to be shut down or merged with each other so that the efficiency of bank increase, and then they can lend more or they can create more opportunities so that they can generate some income also along with that. So RBI is the regulatory kind of thing. You can't go above that. If RBI says the rates are going to be like this, you cannot raise. If you do raise that, the other banks will not do it, and then you won't get it. So please understand, you will never see any bank having any such major difference unless it's a small time of window period where somebody says that for this factor, I drop rate like 0.5 repo rate or this because of this, or for seniors I do this, or because for women I do that. Overall picture has to stay same. Within a limit, everybody has to work in the same structure or same parameters or same rules to follow.
So this is a very difficult subject and very vast also. But I think we learned a lot. With from you. You were able to share a lot of information with our viewers and us in a very simple way. So thank you so much, Vasant, for joining us live and sharing your thoughts about this very difficult subject.
Oh, it's hard. I know it's not simple, but then you got to talk in a simple language where people probably can understand, or you can have jargons where you can keep playing out and the people will not understand anything out of it, for sure.
So we had a fantastic discussion with Basant Tomar, and this was about the interest rate. How does it impact all of us? How does it impact the business? If you have any question, please do not hesitate to send it across. We will address that in the next week live stream. Until then, happy selling, happy rocking, and have a nice one. Bye for now.